Good morning. I am Diane Gerdes, and this is the Mortgage Answers. It is January 18th, 2013. Last week, the Consumer Protection Financial Bureau unveiled their new qualified mortgage rule. Now keep in mind, boys and girls, this is law. It won't be coming into effect till next January 2014, but you're going to see the changes sooner than later. The qualified mortgage rule comes with great responsibility. If the lender or bank refuses or chooses not to approve a loan under the new qualified mortgage rule, then they could open themselves up to civil liability. It will also give the borrower a get out of foreclosure free card. If the borrower decide to stop making his payments, the bank may not be able to foreclose. So the qualified mortgage rule is a really big deal. And everyone in lending knows that the past 12 months every month seems to have gotten a little bit stricter. And I think it's all because they were waiting for this rule, anticipating the rule. One of the things that has changed dramatically is the documentation of assets. If there are undocumented deposits, it's going to be you'd have a better chance of being a quarterback for the Cardinals than you would be of getting a loan approved. And I know it's your money. I know it's the client's money. Maybe he did have it in a safe. It doesn't matter. And bank statements, full bank statements, have become the norm. You're not going to get away with anything else. Also, what about our retired people? We do a lot of retired people here in Arizona. But we have had people that have had a difficult time getting a loan with $1 million in the bank just because of the way that they distribute their assets. And that's the truth. It is going to get a lot worse before it gets better. The ratios are going to change on qualified mortgage to a flat 43%, whether you put 5% down or you put 50% down. Oh, you can do compensating factors, and then you have to do what they call a manual underwrite. Can you say the banks aren't going to do that? Because they're not going to want to put themselves in danger of a civil liability or a borrower that may not stop making their house payments? I guess we'll all have to see on that. Back in 2005, underwriters were paid on volume of loans. Most underwriters could complete 5 to 8 loans in a day. Now it's maybe 2 to 3. And the conditions after it goes through underwriting, most of the underwriters now have to clear their own conditions before you get like a junior underwriter. Therefore, what does that mean? With the qualified mortgages ruling being announced, and keep in mind, boys and girls, this is law, probably we're going to see extended times on underwriting. Also keep in mind that the auditing process for underwriters is brutal. Therefore, you may think you're getting the most ridiculous conditions in the world, and they are, but it's to prevent buybacks from Fannie, Freddie, FHA, and VA. So prepare yourself. Prepare yourself for the wonderful world of financial colonoscopies. And this is without the legal drugs. Thanks so much.